Tuesday, Wednesday, and Thursday. Thank you. We started Monday, red, Tuesday, Wednesday, inside candle, Thursday, inside candle, I believe. Yeah, I would say almost about the same low, just a little deeper maybe. And the candle's still developing, right? So usually this type of names will come into a base near the 20, something like this, near the 20 or the 50 while it's coming up. Something like this, on a daily. This is very sideways choppy. Something will reject around the 20 or so. So this one right here, it had this trend break right here. Let's edit it so we can see it more clearly. Right. He has this trend break. What happens when, I don't know if you saw the videos of the Fibo retracements, right? So when you make a move to the upside right here, from the lows to the highs right here, and you start retracing, it signals that the possible points of returns for the stock are gonna be somewhere around this area or somewhere around this area. So if I were to put my money like let's say the 20 is gonna be rising as the price is staying around this area, the 20 is gonna go rising around right here, and it's gonna meet somewhere on this area, So this could be a place to pick up a long, according to retracement right here at 38.2, right? Hit the retracement and go up. And also, but it's just a weekly candle, right? So we don't know what part of the week and in how many weeks this could happen. It's just timing is just a little bit different, right? So on the daily, we see something like this is the top of this breakout of this. Every time you have a trend line break like that, so most of the time you get like a retest of those points right here, like right here, and right here, right? So most likely than not, this name can get a touch of this trend line right here. I don't know if it makes sense. Right. But it's hard to time it, right? Because what if it has like a small day? And then the next day has another small day, and the next small day, then you reach this target and then it goes up. Right? Playing options is you have to be right up at the time as well as the drop. So, but it's possible that this could happen. Fredo, welcome. Gary Bruce. Who are you on Discord, Gary Bruce?
Let's see.
Who are you?
What up? That's Hype Man, CTR.
Hype Man. How's it going, Hype Man?
What's up, brother?
All right, welcome. I was trying to get familiar with the guys, with everybody on Discord with their Zoom names.
Yeah.
So, right, 7:05. I guess we get it enough time. Let me just see. Message Apple me.
I'm here.
How's it going, Alfonso?
How's it going? I'll be here behind screens, so I'll jump in a little bit later. So
yeah,
we can go with the usual.
We're gonna do a quick analysis on what happened and what could happen. And I don't think we're entirely bearish, but we have room to the downside. That's what I came up with when I analyzed it myself. So I was just going over John Deere, the type of candles that it does, the possible break of this range that it has, this trendline break that it had. We could possibly come in and test it right here, which is also this candle's highs right here, which is also this candle's highs right here. So it's possible for this just to come in and test this level, which is 400. And I believe we have the 405s. All right, 405s. So if by any chance this goes in the money by tomorrow, it has some candle like this, you'll be 5 points in the money and the play will work out. But I mean, it's a stretch, right? We don't know if it's gonna happen. We'll see. Just what matters is your risk management, and Alfonso is gonna touch on that subject after I do this little analysis, right? That way, you're not, when you're having a trade like this, right, that you're buying puts and it's just not working out, but you see the potential of it. You don't stress out about the play that much because your sizing is just correct. You know, that's a key part. Because it's not about like you're just throwing money away, but you're giving it a chance. Everything's a risk reward situation. So you can go to 0 or you can go to $5. So it's your pick, you know. I'll risk it for those $5. But obviously if I'm holding a lot of contracts, then I'll feel the pressure. I think I'll wait. I got a slap in the face 2 weeks ago about sizing. But it happens to all of us. Okay, so I'm gonna go through the indices right now. Gonna go through what we have, and I know it looks like a mess right now. It's a battleground, right? I'm gonna clean it a little bit for y'all. But I'll keep the main lines right here. So the S&Ps. Actually, I'm gonna start with a different one. I'm gonna start with the NQs. I usually start with this one, but this time we're starting with the NQs, and you'll see why. This name right here, I missed this. I actually missed this. It's something that I pay attention to, but I've been trading mostly a SPY than anything else lately that I haven't paid attention to this. So I don't know if you guys saw the classes for the Fibonacci retracements and everything, how it works. We usually short key areas of the market where there's a better risk reward, and the key area came in. If you take a Fibonacci retracement of the highs, I'm gonna skip this very, very high. It looks like an excess high right here. I'm gonna go to the lowest point of the Q right here, and magically, this is not magic, we actually retracing at the 618. So this this is bearish in itself, right? Because if you're looking at this on a weekly, this is mostly to be seen on a weekly time frame, right? You're rejecting this, and then your next steps to make a next leg down is something like this, like this, like this. Just imagine the candles, right? I'm not gonna come here and predict the future, right? But you hit the 10% of the move, and then you make a retracement again. I mean, it's just not exactly what's gonna happen, right? But something like this, and then you start moving up, and let's say you hit the 618 again, then you start coming down, blah, 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 something like this. Something like this. So this actually is something very natural for the market to do, right? Something like 2 steps down, 1 step up, 2 steps down, 1 step up, 2 steps down, just like it comes up in the same way, right? 2 steps up, 1 step down, 2 steps up, 1 step down, blah, blah, until it doesn't, until it changes trends, right? So this could possibly be what we're facing on the market right now, just because of how very, very precise or very close to having reject the 618 at that top right there. I mean, very, very, very systematic, I will say. So this is possible in a scenario, right? We're not trying to predict the future, we play day by day and so on. But you keep this in mind because there's a lot of things that you can play with this, right? Some people will like when you break something like this out of a range like this, that you have a trend line, you break like that, and they think the bear market is over, right? It's hard to call it over because you still have this over here resistance. You can still make it to this high, and the bear market is just starting. You can basically make a double top right here, and it's just making another leg down. So there's nothing that you can say that there's a back to normality on the market. It's just very hard to predict, and you just play day by day. But shorting whenever you make a leg down and then coming up to the 618, shorting the 618 retracement like that, it's money. It's key area, right? The problem that I didn't see is because I've been focused on ES lately a lot. I came up with my own theories over here, that thinking that this channels were gonna do something or whatever. It did not happen. That's why you have to be nimble and change the strats, right? So this one actually made it past the 618. So people that look at this think once you pass it, right? Important is to close above it, right? But once you pass it, let's say that you're only looking at it on the daily time frame. You already closed 2 candles on the daily time frame past it. So it feels like it's out of the water at this level, at this place. Like this is just gonna be a bounce back point to the upside. So you could start with a new retracement from like the low to the highs right here of the last move, and think of it like, okay, if the market drops, where can I pick it long again? It's either one of those levels right here. So you have to combine it with other lines, right? That you have on your screen. So like, let's say this 38.2 retracement could meet the EMAs at some point and be this candle high right here. And this could be our bounce back point, and we can take some opportunity for longs or whatever. And we'll take a look at names like longs on the S&Ps, or or components. We'll look at sectors was looking strong and whatnot. So at this moment, this could retrace back furthermore over here, and then continue up, right? And it's just a hard thing to really call for on a melt up, because we did have a pullback right here, but how far did it go? Like at this point, whenever we went up to this point and we had a first pullback, how far did we go? We didn't even hit something like this or anything like that, right? So it's just on a melt up, it's hard. It's actually harder. There's like really no interest to this. So that's what I got. The NQs are on still danger zone for tech is just in danger still. Tech is in danger to still make those lows, a new low right here or so. And the SPYs looks like it's out of the woods, right? So let's look at IWM. This one I don't look at the futures ones because I already got drawings on this one. The future symbol is /RTY, if you guys want to follow that one. But this essentially broke this downtrend right here, this trend line, and retest into a breakout. These yellow lines mark the range of the last year and a half. If you look at this on the weekly of the year and a half, it was in this massive range right here. When you broke below it, it was actually very bearish. You make a bear flag, but pushing back above the range is bullish, right? Until you realize that it can be a false breakout. If you notice, this was a false breakout of the IWM. So the market can be very tricky, right? This can be a false break to the downside, it recovers, but now you're in a situation where you're back into a range for one day, I think. Yeah, only one day, and then you're back below it. You would think that this IWM was gonna hold above this level, really. Because now what the action has come forward to is that the next day, what you do is push up, touch the bottom of the range as a test and reject, right? So that doesn't look bullish at all. It looks very bearish on small cap world. It looks very bearish. So you had a gap right there, it got filled. Now what you can say bullish about this name is that you were rejecting the EMAs, the 50 and everything this whole time, and now you're up above it. If you make a base right here, you have a chance to go back into the range right here, right? So having broke below again, retest and below, that's bearish, but still being above the EMAs is bullish, right? Or not bullish, but it's still, I guess, has a chance to survive, to say the least. So we got that. And then we got the NQs. It's still on a very bearish retracement. One thing that keep in mind that even though it rejected the 618, when you place your retracement from the low to highs right here, this thing, even though I already rejected, like I said, as a bear retracement, it can still be picked up in any of these areas right here. Any of these areas. So whenever if we do break down, we get to somewhere like this, 13, 8, 27, it'll be, I don't think it's a bad idea to try it along. You know, if you're shorting all the way through this and you get to this level, this will be a place for long. So you, at that point, you'll be looking at names like Microsoft or so, like or Apple or Tesla or so, you know. So that's what we got. I got a watch list of sectors right here, and then you can just look at the spider sectors one by one and analyze it just the same way, right? Like let's go for XLY right here. Right here, XLY. Let's see the situation right here from high to low. Rejected at the 618. It's not magic. It's just very, very common. This is very bearish retracement right here. Can still come down right here. XLK. It's gonna be the same idea as the NQs, but let's give it a try. Right, 618, same idea. XLI. Now this one does look a little better, I guess, because they went way higher than expected. This one it's a little bit different. So this is not as bearish as it seems. So where can you pick it long? Somewhere this area. That's actually, I like it. So this actually helps our John Deere play, right? If XLI has room to test this level right here, to test the 20 EMA on the daily, to come down further, John Deere will follow through, right? It's part of the industrial sector. So you got that. You got XLC. This one's mostly bearish. This one hasn't come out of any other downtrend, right? Well, what's happening? Hold on, guys, give me a minute. I don't know. This software sometimes. This one hasn't even broke its downtrend. Hasn't even reached it from the all-time highs to all-time. So it's lows. It's not even close. Extra bearish. If you take it from the last move down. So this one still rejecting, you know, it's not out the water. This one actually looks a little more bearish than anything else. And then if you're looking into weakness of this, you know, you see like the candle, you have a daily candle closure below the 20 or so, you're gonna go look at short names like AVGO, Facebook. What else is on? You know, you gotta have watch lists for the stuff, right? Like XLC, right? You look at shorting like something like Twitter, Viacom, Verizon, whatever looks bearish on your right here, right? Disney looks mega bearish. Disney didn't have a red day when all of the leisure stocks were running. I mean, didn't have a green day. Usually this runs with leisure stocks, but I guess it's more communications than anything else right now. Netflix can be a name, even though I took a call debit spread. If it holds above the 20, it can go, but yeah, it actually closed below 20, so it does not look that great right now. Might cut that. Look at this name. You see, this is where the opportunity comes, right? This name right here, like I don't trade a lot, but if you see that XLC is weaker, right? This XLC is a level, it's a place to short. You look for relative weakness. You see something that is around the 20 that it can possibly make a new low, and you'll have something like that happening on a day right there. And how many points is this? We're talking about coming down 24 points on the day. That's a lot. 24 points on a day on some options that are out of the money, you know. I'll give you an idea right here. Let's say that this day started around 570 and it had potential, right? 547 it ended, 570, 547. So around the 550 puts, right? Let's say this name right here, the 550 puts, you put it on your chart right here. This one right here was trading around right here, this tick right here, $1.36, right? Somebody loaded up at this price, which is 230 something cents, and they closed the day around $7 or so, $6. So 5, 6, close the last trade at 457. But yeah, you get the idea, right? Bid and ask is 570, 820. But yeah, that's what. So we go back to the sectors, right? Just to go quickly to what we got. XLB, another name. Came down. Materials actually have cleared a lot of the move that they had on the way down. So those are not that bearish. Materials is not a heavily weighted sector, but it's part of it. Energy, it's its own name right now. Hasn't come down from the highs that much because of oil, and it's still looking good. Oil is it's actually at a trend line right now. So if oil loses that trend line, I think energy can lose this trend line as well. So something like that, right? It's all it's uptrend that it had, right? So you'll be looking to see if you chart something like oil futures, and then you'll see that if oil futures fail, then you have a chance. You have a chance for it to short oil names and bring them down, right? But it's all this is all they moves a lot with anything that's geopolitical, right? The oil was upon right here when Biden last night he opened some reserves. There's just more supply of oil and it breaks the price down, but it's not enough actually. So it could have a bounce, but if more nations open more reserves, this is gonna go down lower. This is this uptrend right here, and then you'll see the leg down on XLE, and you can start shorting names on energy, right? XLF. This is financials. Today, it was the most bearish sectors out there. This is one of the most bearish sectors. So from the last move to this one, it cleared 618 from all-time high to the low. It cleared 618. So you could argue that it's just having a retracement for the upside. You could argue you have a gap right here. This name can have a lot of gaps, but let's give it. Financials can have a lot of gap, but you recognize it, right? If you're shorting this name, somewhere around this area is where you look into take profits or so, right? Or aim the gap fill and get out. XLP. This one already cleared a lot. Here, this actually looks very bullish. It's actually very bullish. It lost very little throughout the sell-off. It could come down to retest this trend line and go up. And then you're looking at those resistance on these levels. Like that, just like that. Those where you hit the trend line right here, those candle highs right here, this candle high and this candle high and this conjuncture right here of candles right here. So this one I like it. You look at if this looks more bullish than anything else. I say that the S&Ps are not going to drop. You look at names on this thing. Where's my XLP? All right here. You look at names right here and look for something that you like, you know, something that moves on, some things that has delta, right? ADM, it's a good one. KR, it's a good one. That's why we're playing it as well. This one does have range, but I never traded it. MKC, I don't know. Oh, McCormick, I know what that is. Mayo. Tyson Foods, stuff like that, right? Kellogg's, Kellogg's doesn't look good. MO, MDLC, actually. We were gonna play this name, right? Yeah, this name actually has a, if you look at this, it's spacing above the 20. So we might put this on the, on something to play on the upcoming days. You break this level, which is this candle low. You have this 50 EMA right here, and then you can aim for this gap fill right here. So something that this is doing basic TA, right? You identify the gap, you identify where you're sitting on the EMAs on the 20. This is a 20 and this is a 50. So once you base above the 20, you have a chance to break up to the 50. And if that breaks, you have a chance to go to the next resistance areas, which will be something like this. Right. So that's what I got. So given that tech is bearish, the SPY is not that bearish. We are just gonna play ear by ear. You're gonna look for a strength on what's a strong inside the SPY, and then weakness for possibly on tech to see what you can long for and everything, right? IWM, like I say, looks kind of has a chance for go bullish, but more bearish than anything, going back outside the range. And yeah, let's see. So something else, right? I want to show you guys this. This is another bullish, like you have to find reasons to be bullish and find reasons to be bearish, right? This is another bullish thing. This is called the volume profile. It's related to what Alfonso uses in market profile on his stream. And what basically shows you is this bars that are spiking up like this is volume on price level instead of volume, you know, on this is this volume on time, you know. This is so like if you go to, let's say on the 10-minute, you'll see how much volume it was per 10 minutes of time, right? But if you look at this, it's like a different way to look at it, that how much volume was at a certain price, you know? It's just a different type of analysis, let's say. So usually the highest amount of volume on a certain price becomes the virgin point of control of the day. And what a healthy market does, this is one session, right? And this is a second session, this is a third session, fourth session, and fifth session right here. And this is a cumulative one on the side. So what you have done right here every day is the highest volume trade, highest price traded on volume becomes your virgin point of control. So a healthy push up, a healthy market, what it does is establishes the point of control of the day. The next day you establish some agreement of price. You drop, retest the last day's point of control, and then go forward. So what was wrong with the market, it was that this went untested this day. This gap up that we had was held, did not break to this low, and made the market have this unfinished business, you know, to go back and test so it can go up. So this thing that happened at the close, there was no volume at these prices compared to these prices, right? But eventually this market ended at the testing just this point of control that was left on a 5-day balance untested, you know? So if the market wants to go up and continue its melt up, it had to do this, and then it's allowed to go up. So that's a bullish case, right? And if you look at this on the cumulative one, the highest point, the point of control, the 5-day balance is this one, this red line right here. So you did trade a little bit below it, but like I said, it's bullish at the state at this state, you know. Well, we'll see. We'll see what happens. That's something that to look for. We look at this on every day. I don't know if you guys remember, but we actually going back to this. We had a drop. I don't know what day we shorted from here to here, and then we switched to calls at this point. I ended up taking profit around this area because it was a point of control, whatever, but it went way higher. But you know, identify those things. It's like it's very important. It's a lot of opportunity that can be taken right there. So it was hard to go long through this day, and this day, knowing that this is unfinished, that it can any moment we could just drop, which we did at the end, test it, and then go back up. So I did pick up some longs because that's a bullish case that I have on it. But the NQs don't look like that. They look like they want to drop more. Anybody, how do you find that on TOS? I can send you a link. I can send you a link right here. Let me see. This one right here. I can save grade, share grade right here. No, actually, no. Cancel. It is how you share it, but let me share the whole thing. Because this thing comes like this, right? You said how
you are sharing the whole thing if you take it from there.
If I just go
there.
If I just go with this one?
No. If you want to share the whole grid, just share it from there. Yeah.
Yeah, that's what I was gonna do. Yeah, so we're gonna share this with a name, right? In profile right here. Shadow trader. Share everything with the chart. Sure. So you know how to open share items, Roberto, in Thinkorswim? You're gonna plug this in. So basically when you look at this, you go to setup, you're gonna click on open share item. You're gonna the link that I posted on
the chat.
On the chat, you're gonna paste it right here and then preview it, import it, right? I already have it, so I'm not gonna click import, but that's the idea. And you'll have it right there. This is, and for everybody to know, this actually comes in with your subscription because this is all stuff that you pay for it outside, you know? This is actually, it takes a lot of work and time to have your people that do the setups, right? To do the indicators and to configure this and that. It's probably not that hard, but you get the idea, right? I don't really use the other parts of this thing right here, but it's important, right? That you have the tick, the advanced decline lines on the NICE right here. When this is just a chart. This is just, it's a 15-minute with the stochastics, and this is just a 5-minute chart with the auto trend lines. And I don't know how to use this. Don't ask me. I don't know.
Those are ticks and momentum.
Ticks with a momentum indicator. It actually has this actually triggers an alarm every once in a while, but I'd shut it off.
The dots, green and red, are when there's a change in volume.
Change in volume. All right.
So do you guys prefer Thinkorswim over TradingView?
Yes, I do.
do.
I use both, but I like more Thinkorswim. I don't know. I started trading with that one, and I have a lot of already a lot of scripts already developed there, and mainly because I started learning with TOS. Actually, I use TOS, but I don't execute my trades on TOS. I just use it for charting now. I used to use it before but I found that Tastyworks is more, it's a quick, don't have the problems that TOS is having lately with the delays and getting. So for execution, I use Tastyworks mainly.
Yes. Today was super slow right here. Today was super slow.
I
My
also-
orders were going
yeah.
in too late.
And for futures, I have a Ninja Trader.
Yeah.
Awesome, thank you.
So yeah, there's that. So what do you think of about the S&Ps and the NQs? How did we miss that NQs retracement?
Because we were not watching it.
Yeah, we just don't trade this that much compared to the SPY.
No, because
Right.
you said it all. Actually, I mean,
It's perfect.
we have to have the different scenarios, but at the end of the day, we just trade what the day show us, right? Since we're not swinging, I don't worry much every night what is gonna happen tomorrow. I mean, tomorrow we'll see, and we're gonna trade it that way. Both ways, we can take trades. So that is the thing that I like about day trading comparing to swing trading, right? You go to bed not thinking about your positions. And if I left any position, it should be a runner, so it shouldn't be taking my
sleep.
sleep. So that's it. Okay, so I'm ready to share some. Let's take the rest of the hour, 20 minutes to go over the risk. And I'm gonna share now my screen, if I may.
Quick question while you're pulling that up. Intraday trades, what time frame are you typically watching for entries and exits?
I'm gonna
10
go
minutes.
through that. I'm gonna go through to that. I don't know if you saw my template and what I use, and I also can share. And I'm actually it's already in the resources. I use mainly three time frames for the intraday. My main time frame is the 10 minutes. The 10 minutes is a magnificent time frame because it's like it has a little bit of both. It has a little bit of what the 1 and 5 minutes brings you, but it also has some range of the 30 and 1 hour, right? So it's give you the smoothness to don't panic on a trade and have a better timing, and more when you're managing several trades at the same time, as I do. Lower time frames get you crazy. So a lot of mistakes that the people that are starting trading, I don't know what they start doing, 1 minute, 5 minutes. I mean, it's the only reason that I would use the 5 minutes is only in the first 10, 15 minutes of the opening bell. Because of course you don't have enough candles, right? Because the session is starting, so you just go to 5 minutes in order to start gathering information quicker than in the 10-minute candles. But it's mainly 10 minutes, and I use 4 EMAs that are my main. All this information is in my videos, and I suggest you to go and see them about my technical setup, because each EMA has its own purpose, right? I use it for different time of decision making. All right.
Perfect, thank you.
Okay, can you see my screen here?
Yeah.
Okay, so what I want to do is just a recap of the most important, the foundation, the most important part of being successful in trading, no matter what type of trader you are, investor, long-term, short-term, swing, whatever, which is risk management. And what I need you for you to do, and the answer to these questions is only yours, is first you have to determine what is your goal of trading, right? Am I trading because I want to grow I have a small account and I want to grow it to overcome the PDT rule, which is $25,000, so I don't have the issues of restrictions in daily transactions. Do I want to use a smaller amount of capital to generate frequent returns? Do I want to compound over time that account, which means that I'm not going to take any profits or any capital in certain time of that, and I'm going to be compounding the profits in order to grow the account. Another important part is how time frame, how quickly you want to grow that account, right? And of course that is, it could sound a stupid question because everybody would say, yeah, as soon as possible, but it has to be with realistic, what is your realistic objective in that? Why? Because depending on that, it's gonna guide you what you're gonna have to do in terms of how to manage the account. Are you gonna be increasing the account with additional income every month from your payroll or other income resources? That also makes a difference. Why? Because you're not only going to be relying on the initial capital that you have, you're going to have a flow that you're going to be getting quarterly or monthly or every 2 weeks. Do you want this to be an income generator or an investing, right? And that is also very important. Usually if you're day trading, what you're looking for is more a type of income generation mechanisms once you get to a certain level, right? And the last one, and this is the most important, are you serious or not? You have to really ask do you really want to do this for a living, or if not for a living, for part-time, but I'm going to take it seriously in the way that I'm not going to be gambling and making decisions just because I felt that now it's time that the market has to go up or down. So you really have to ask that question to yourself, because it's going to make you accountable. I mean, if you're not serious in the way, no, I'm just having some extra money and I want to play in the market and I want to do it as a hobby, and that's fair. That's fair, and it's valid, but only if you decided that way. No, the thing is, what is not correct is that you decided that you're gonna do this probably for the opportunity in the future to have some financial freedom, and you're not coherent with your daily decisions in terms of what are you doing day to day. I said it this morning, right? I mean, if you're going to treat this as a business, usually business don't get their annual sales on the first in one transaction. Right? So that is just like a main, and once you answer these questions, and there's are more like a strategy questions in order for when you're doing a business plan for a new business, and you start analyzing the market, what are you looking for, what are you going to be your customers, what is the niche that you're going to be. This is more or less like a helicopter view of first you have to have very clear what do you want to do with this money that you're going to be investing, and the time that you're going to be putting into your investment, right? Because sometimes you don't see that part. Yes, you lose money, but you also losing a lot of precious time that is not going to be, that is the only thing that is not going to be returned when you become successful, right? So you have to think about that, and also put an intrinsic price or extrinsic price to that time that you're devoting to your trading. Somebody is not muted. Or is that a question that you wanna ask me? Nope. Okay. Okay. Once you have that, coming back to the specifics, you also have to determine what is your daily goal and what is going to be your maximum daily loss. Both you have to have it very clear, because you cannot be trading all day, even though you stay with us the full session. You have to have a goal for a day. And once you achieve that goal, you have to stop trading or drastically reduce your positions in order to make sure that that goal, if accomplished already, you keep it until the end of the session. What I suggest for a daily goal is the equivalent of maximum 2 times your 1-to-3 risk reward ratio. And I'm going to explain this a little bit later, but it's very simple. If you have a maximum loss of $100, that means that if you're risking $100, we're looking for a 1-to-3 ratio. So we're looking to make $300, right? That is a 1-to-3 ratio. Even though your maximum position is going to be $500, that is one thing. Your maximum risk is 100. So if you're risking the 100, your maximum position for loss, 3 times that, the 3-to-1 ratio, is what you should be aiming for. That doesn't mean that you're going to get it every day, not on every trade, but it's what you're looking for. And that is the importance of picking trades that make sure that you pick a trade that has the range for the day to accomplish that 1-to-3 ratio. That part of that formula, it's usually made by me, right? Every time that I call a play, I make sure that the play that I'm calling, it has the range to achieve 1-to-3 ratio risk profit, right? And when I say 2 times your risk reward, is for if I have $100 of maximum risk per trade, 2 times is 200. So I should stop trading once I achieve $200. The equivalent, 1-to-3 is $300. 2 times that is $600. So I should stop trading when I reach to my 2 times my maximum risk reward amount, right? On the other hand, on a daily maximum loss also has to be the set every day, right? And what I recommend you for you as well is, if you lose the equivalent of 2 times your maximum amount to lose per trade, you should stop trading that day and just reset and just wait for the next session. Again, if it's $100 my maximum risk, once I lose 2 times that $100, so it's 200, I get out. So my day is done if I win, if I'm $600 profitable, or if I'm $200 down. So I don't know if I made myself clear in that. Let me see, because I don't have the chat here. Okay. So that is the introduction, guys. So let's go straight to how are we gonna manage that trade, the intraday trading, and we have to take these 2 things is very important. Once I call a play, sometimes you have to be able to have the patience, once I call the play, that to go to the chart and take a look for yourself and see if, once you are ready to place that play, if you're chasing, if probably the play already run, double check if it has room. What is the next level, the next target? Most of them I already give it to you in advance. What kind of pattern are you seeing in your charts? Is this a wedge? Is a bull flag? A bear flag? Try to recognize that it is a range break. Try to recognize what pattern are you about to play, right? Make sure also that the importance of the risk reward. Again, okay, the strike that I'm taking, what is the delta of that strike? Okay, is I don't know, 30 deltas. Okay, so I need to make 1-to-3 ratio. How many dollars the underlying has to move in order for me to achieve my 1-to-3 ratio? So that makes sense. It's gonna be very difficult that you understand all this at the very beginning if you're starting, but all this information, you have to be conscious and aware of it, because you have Cube said it this morning with the internals, it takes a lot of screen time, right? So this is the same. It takes a lot of screen and practice time in order for you to develop like a muscle in your brain, muscle memory, that every time that you take a trade, you are watching and being conscious on all these items that I'm telling you right now. And of course, the 13 EMA rule, the 4 EMA rule that I always say, right? And if you don't know exactly what I mean with the 13 and 4 EMAs, is they are in the videos. I'm not gonna go to the technicals right now because I wasn't just gonna go directly to risk management, but in my technical analysis videos, I explain the EMAs that I use and what I look and how I use them. But usually it's the 4 and the 13 EMAs give me a lot of information if I should be exiting or entering into a trade, right? Another important thing that you always have to be very, very, very conscious before you enter a trade is that what is gonna be your stop, right? What is there gonna be a stop in this situation? I'm gonna explain you how are you gonna manage your stops, but you have to have them very clear, and you have to be aware that either you're gonna put a bracket order, a OCO, a stop loss or something, but you have to have any type of mechanism, or you're gonna follow directly manually. You better be sure that at least you're trading only that or 2 more trades, because you're gonna have to be putting very close attention to the trade. Otherwise, you're gonna be not able to pull the trigger when that stop it's reached, right? And the last one, but the most important, is that you have to be very disciplined. If you're going to start developing this strategy that I'm going to tell you about, how to raise your risk, how do you manage your risk, it has to be done on every trade. Otherwise, it's not going to work, because what we're looking for is having an edge, means having an advantage over the market. And the only way that we're going to get an advantage is playing with our probabilities in our favor. And for that, we need consistency and repetition. If we're not consistent and we don't repeat the adequate or the number of times that are needed in order for the probabilities work for you, this is not you're gonna complicate the formula, and it's gonna be more complicated. So these are the things that you have to take in consideration when you're long. When you're gonna go short, okay, I mean, you have to, why are you going short? It's because it's extended, because the momentum is dead, or I saw that the volume already slowed down. Don't try to scalp the tops. It's very complicated. I mean, you're never gonna find the right top. even though we talk a lot about the perfect entries, right? And it's the same. I mean, you have to always, okay, I'm seeing if I'm going to short this, I mean, am I on the right time? So this is just a summary that we can go more in detail later, but I just wanted to give you what you have to have in your subconscious every time that you take a trade. So going directly to position text, no, this is not gonna help right now much. Okay, so this is the famous risk reward table, right, that I was mentioning, and everything is based on your portfolio size. So I have here several examples from $500 port to 100,000. So to make things a little bit more easy to explain, I'm going to use the $10,000 just because it's around, it's easier to understand it. So if I have a $10,000 and you can determine the percentages are not the same for each amount, so more or less are different, but you can more or less use the range in which your account is and take a proportion of how do you have to manage this. But if you have a $10,000 account, your maximum position is going to be $1,500 per trade, right? Your reward is 600 and your risk is 200. Remember that I told you about the 103 risk reward, and this is what I mean. If I'm risking 200 out of the $1,500 that I'm going to have on my maximum position, I have to look for $600 of profit. Not always is going to happen but again, you just have to make sure that the play that you're taking has that range for get to that goal. But what you want to try to do is to try to manage, if the trade has the potential to do it, is for you have the ability to manage that trade in order to squeeze it them all the way to that 1-to-3 risk reward. And why the 1-to-3 risk reward ratio is so important? Because if you have a 1-to-3 risk reward ratio overall, you only need around 40% of your trades to be correct in order to be profitable. So that is the importance of having this 1-to-3 risk reward ratio, because you don't have to be right. You don't have to be correct to be profitable all the time. You only need between 30 to 40%. So that means that of every 10 trades that you take, if you have 4 right, you're going to be profitable if you follow this technique. So that is the importance of, and that is what you don't have to marry a trade. And if one trade is not working and you just got stopped, I mean, don't sweat it. Just be conscious that this is a business, and you already know that the part of the rules of this business is that you're going to be wrong 6 times out of 10. So you have to get used to get stopped, because it's more probable that you're going to have more stops than winning trades. And that is okay. In our case, it's not happening. I mean, I've been tracking my performance for the past, I don't know, 5-6 months. I don't know how many. You look at them and in the track record, and we are between 70 and 80% win rate on the trades that I play, right? So we're almost double, so even better, right? But so what that means that we don't even have to strive for the 1-to-3 ratio. Probably 1 to 1.5 will be okay, but that is not the case in this. So that is what is very important. I just want to make sure that everybody understands so far where I am here. I'm here watching the chat, so just give me a number 1 if everybody is following. Passion of okay. Anybody has any? Nope. Roberto, Victor. Okay, everybody. Okay. Okay. So far, you already know. You already determined. How do you make sure you take profits? Hold on. We're going to there. To begin with, you're gonna make sure to take profits, being very disciplined with this, having very clear what is your risk reward. Okay. So let's say again that we're gonna start a trade and we have $10,000. So I call a play. And what is gonna happen, guys, is that you always gonna start with the starter. Remember that I mentioned that. And my starter, in this case, I'm gonna highlight this. In blue. My starter has to be maximum, my maximum risk, which is $200. Even though my full size position is gonna be 1,500, I'm gonna start with 200. Okay, so we start with $200. The position here. I'm gonna try to put it bigger because. Okay, that's your starter. This starter, guys, can be less, right? This is the maximum. Usually, depending on your report, usually you're gonna have to use them all since the beginning. If you put 100 instead of 200, you have more cushion, right? But your starter should be no more than your maximum risk. So let's say we're gonna go here with maximum risk, and my starter is 200. So okay, before you start trading, and also you also have to determine in each individual case what is your port size and everything, and what is the optimum type of price of contracts that fits better your account size. What I mean about this, ideally, I would suggest you that you trade only the place that allows you with your maximum position to at least have 4 contracts. I'm gonna put it here. Okay. Max position at least 4 contracts. What this means that if I have I have 1,500, you divide it by 4, you are able here to buy contracts up to $3.75. If I call a play and you have $10,000 of port and your amount size, maximum amount size is 1,500, you cannot take any trade any contract that I call above $3.75. So a lot of people ask me, which play should I take? Because you play a lot of them. Only play the ones that fit your portfolio. What is the best way of identifying exits on 3-to-1 risk strategy with options prices given volatility? Familiar with the risk reward strategy of trading stocks? It's very similar with it. It's a little bit. I mean, the basics are the same, but in option it's a little bit more complicated because you have to work with the delta, right? Each contract has different delta, so that for each dollar that the underline moves is going to move in proportion of the delta that it has. So the only difference is in stocks is 1-to-1, right? It moves $1 is $1. Here in options is times the delta. So you just, instead of multiplying by 1, you multiply it by the delta that you have. And that is going to give you what is the range that you need in order to accomplish your risk reward ratio. Did I answer your question? Okay. So here, guys, this is very important again. So now you get it, right? What trades are you going to take? Only the trades that the contract amount allows you to buy minimum 4 contracts. Hey, I only can buy 1. Don't even think about it, right? That play is not for your account size, period. What is the ideal number of contracts? 8. So if you want to be even more successful, I would say this amount, I divide it by 8. And I would say if I have $10,000 and my maximum position is going to be 1,500, I only going to get contracts no more than 190. Because it's going to allow me to buy 8. And now you're going to see why 8 is the magic number. Okay. So let's try to make a simulation here. So let's say that I call a play. We go with $200. In this case, guys, if I'm gonna go for the 8 contracts, but my initial is 187, right? So I only can, my starter can be only one contract, period. So imagine that you take the 1 and you already got to the magic number that I told you, what is 15% or more. You add, right? So you're gonna add after first trigger to add 15% profit. Second, where my next resistance level is. If it's too close right now, so that means I'm already 15, but the first target that I was mentioned or the first resistance is almost there. So you just wait, you don't add. Why? Because you're gonna get rejection immediately. You have to wait for that break on the next resistance or support level. So those are the 2 criteria. It's not just 50%, let me add. No, 15%. Do I still have range? Am I at least halfway from my buying point to my next target? Yes. Am I halfway? Yes. Am I 15% up? Yes. I add. No, I'm almost 3/4, almost reaching. No, I wait until the next break. Okay. And what is important to always add on waiting positions, because now I'm gonna add here the remaining, I have a remaining amount to add of $1,300, right? So what is gonna happen here when I add here? That I'm gonna have my new investment, $300, $1,300, my starter plus the profit of the starter. So now I have 1,500, 1,530 playing in this trade, and my maximum, my stop is gonna be $200. So now I have $200 plus $30. So now my stop is wider. I have a cushion there. Okay. So you only don't have, not only have your initial $200 from your money, but you have the 200 plus $30 to widen your stop or your tolerance, because you have to first start losing your 30 of winning plus your 200 to get stop, right? What happened when you average down? The opposite. You're just getting farther and farther and farther to get to break even. And you don't realize that. And that is the problem with average down. Because if your trade had no chance when you bought it, imagine what chance it's gonna have when you average down. Very likely it's gonna be on a lower level, right? So you're adding good money to a trade that has lower probability of being successful from the original play that you took. So it's like not very smart. Okay, so I already have full position. What are gonna be our next targets and how are we gonna scale out? 30%, 60%, 90%. Let's say we get to 30%. So that means of the new price, right? So I have 1530 times low. I'm gonna make it very simple, guys. So you can, when I get to 1889, which is 30% profit of the new average price, I'm gonna sell half. And I wanted to do it this way so you can see. So I take back 994. Okay. Now, when I get to 60%, minus this amount, $994. No. When I get to 60%, which is here, I'm gonna take half again. Right? So I took this is profit that I took, or not profit. I mean, I sold here, and something is wrong here, obviously. Times 50. Okay. So now I have this balance, and I'm gonna get the next 30%, which is 290 of the original. And I'm gonna take half. Okay, and this is my balance after taking halves, no? 420. So I already took out of the table this amount. I already have $260 out of the table, and I have $420 remaining, right? And I invested. So I have profit of $560, right? I already have profit of $560 because I already took this off. I took half, and half. So even though if I lose everything, I'm still making money, right? Here, when you get here, and here is very important, you take half, move a stop to entry, plus 30%. You have simultaneously, you do the same. You do the same here, the same. When you take your second, move stops to entry, because you're 30% up. So you move stops to entry price, so you can get the break even. Here you move, you're 60% up, you move your stops to entry plus 30%. And here, you do the same. You move your stop. Once you get to this phase 3, you already know that you already have profit and your initial investment out. So now this can become a runner. And you can do with this runner whatever you want. The wisest thing to do for the runner is to at least be rolling the contract. If you don't know how to roll, we can go with that later on, or just setting a stop here. So let's say entry plus 50%, and I'm gonna leave it run. If it goes below, I secure 50%, or more aggressive to entry. I don't care. I mean, I already have 90% here involved, but I wanna give it room, so I'm willing to risk all the profit of this portion and get out, break even, in order to leave it a runner.
So can I add something?
Yes.
If somebody today played 2 contracts and they cut one for profit like they should, and the other one, they called it a runner, that you cannot have runners on if you're only buying 2 contracts, you know, so it's, and it's, I'm not shaming like only buying 2 contracts. It's fair, you know, if that's how you want to play it, it's fine. But yeah, that's not runners, because then you hold play. If you took profits, let's say on the first contract at 30%, and then you leave the other one to run, whenever it's the other one goes to 0, your entire play is red, you know. So there's no possible. So it just says a recommendation, take profits on the whole thing, if that's.
And that is the reason, guys, why the magic number is 8 contracts, because it's the only way that you can do this, right? Because you're gonna start with 8 here. Then you're gonna cut half, you're gonna be 4, you're gonna cut half, you're gonna have to cut half, and you're gonna remain with 1. The only way that you can have a runner is if you have 8 contracts. And you scale at 30, 60, 90%. So make sense? What happened is I only have 2 contracts. You can only go for up to 60% profit, because you're gonna have to take half at $1 at 30% and the other contract at 60. So if you wanna make your odds in your favor, only take the plays that I call that allow you to buy 8 contracts, minimum 4. But 8 is the ideal. Even though you're gonna be able to play less plays, doesn't matter. But the ones that you're gonna play are gonna be play with the maximum edge that you can have to beat the market. Okay. And that is the.
You say something during the session too, that, what was it? If you let a position that went 30% to red, and bullets, you shouldn't let that happen, you know.
Yes.
Oh.
So this is very important. That simultaneously, every time that you take these profits, you move your stops, because if you don't do it, this is not gonna work. You have to do everything almost at the same time. Selling half and moving the stop of the remaining. Selling half and moving the stop of the remaining. I use brackets, orders, or I just place them. So sometimes I don't even notice. I just get stopped out and I'm not, oh, I got stopped out. Okay, it's gone. And people tell me sometimes, hey, how come you, for example, today, JP Morgan, you squeeze it until 400%. Of course, I squeeze it at 400%, but obviously I didn't squeeze it 400% with my original play. It was with the remaining. I took half at 30, half at 60, half at 90, and from 90 to 400, I left the runner. And I was just moving the stops of the runner. But that I never say that I kept my full position all the way to 400. That's, I mean, wouldn't be great, but it's crazy. Another thing that is included here, guys, that if for some reason we take a trade and it goes to 100 very quick, you don't even have chance to, hopefully we have this type, but we do. If you get to 100, you sell half immediately and you already have a free play because you already risk out. And then you can do whatever you want with that one because you are break even in a very early stage of the trade. So you can leave it. You do a lot of this with the Lotto Fridays, right? The ones that expire the same day. Is the best way to manage. And if you have an account less than $10,000, don't even try to play 0 DTs. To confirm, if your maximum position is 1,500, do you enter with your maximum risk of 200? That is my starter. Yes, $200. I get those 200 becomes 200 plus 15%, like in the example here, 230. At the moment that those 200 are 15% up, which means 230, and I still have room for the next resistance, I go full port. I put the rest. I started with one contract here, so that means one contract, and then I buy the 7 rest. The rest of the 7. You can play also, okay, sometimes, oh, this is a very difficult day. I'm going to just play half of my position. So you just go with half, right? That all depends also in the day, but don't make it too complicated, guys. If you really respect your maximum loss, you can go with whatever you want of money, but you have to you just have to make sure that if you get to 200 loss, you get out.
Kind of like today, we know that the quarter ends, or kind of like, or actually most importantly on quad witching days, is days that you wanna size down.
Do what you want with the runner? No, at least, and this is very, put the stop on entry price, but I wouldn't even do that. Because a runner already has 90% profit. So at least entry plus 25%, so you can pay for the commissions, and I mean something like that, or 10%, but don't let it go break even or lose it all, right? Even though you can afford to lose it all and still be profitable, you're taking a lot of the effort of a good play to the trash because of that, because that is $450, in this case $420 out of 560. It's almost 100% of your profit. So don't do it. You don't want to be scaling out to, at the end of the day, end up break even because you left the runner die, right? So what's the purpose? If you ask me, if you have a small account, I don't leave runners until I get to 25,000 at least. The runners are when you really don't get hurt if you lose it. But $400 in a $10,000 account, it's a lot of money. So I wouldn't make a runner. I just sayonara. 90%. You don't have to sell the last contract. You just move your stops to entry plus 80%, give 10% cushion, and that's it. And that's fine. And remember, guys, when I say, hey, what if I get out at 30, but it had room to 40, 45? I didn't say sell it. I just say make sure that you secure that profit so you can put a trail stop or a limit order stop there. But just make sure that the price don't go below your 30%.
So yeah,
But
that's
that is up to you. The easiest part, if you're a beginner, is to sell it, because if for some reason you messed up or you're not quick enough, or you're trading in that bullshit application like Robinhood and Webull, it's gonna be impossible to make this happen.
So I was gonna say that, you know, that sometimes they go past the 30% quick and to the 40%. And yes, the role is to sell at 30, right? But it's not it's written on stone. And if you place a stop loss at 30, what happens is that if it drops, you were planning to sell at 30 anyway. So there it is.
I suggest you to buy a software or something to journal your trades, guys. The best that I can recommend to you is, I use this one.
Or if you get a partner to review trade, that's cool, because I do it with stats after close.
I'm gonna share with you the journal, but some of you already know journals. But the easiest one is the ones that you just download in an Excel sheet, your trades for the day, and you just upload it. Because if you do it manually, it works, but at least you're Excel lover. As you can see, I'm not. I'm used to be. I'm not anymore. So I mean, I hate making spreadsheets and everything that demands effort. I don't like it. That's what I'm trading. So that's what I say sometimes. But sometimes you work much more when you're trading. The thing is that you don't feel it because you love it so much that you don't feel that you're working, right? So, but that is a different story. So I don't know if there's any question, guys. We already extended 30 more minutes out of the hour, but I think that this is what I told you today is the holy grail, guys. You can even trade based on a coin toss. What I'm gonna trade today, coin toss, Apple or Apple, up or down, coin toss. Tails down, and you apply this, you're gonna make money. As sarcastic and stupid that sounds, but it's true.
I got a question.
Yep.
So would you skip the rules of taking profit like that if you see the potential in the chart?
Yes. You just make sure that you put your stops. You can see the potential of and hold it more than 30%. But you have to make sure that if it goes below, you get out. So in other words, yes, you can hold it if it goes up, but if it goes against you, you have to have a trigger to take that 30%, no matter what. Even though it's just a quick retracement and then went up, so that is what you have the other rest, right, for. So it's a tricky answer, the one that I'm giving you, but if you really want to be consistent, because you're thinking it with, the thing is that you have to start thinking about the next trade. You don't get married with this trade. Oh, what happened? It came back. I shouldn't have sold. I mean, no. I mean, you execute it. You do it. Move to the next one. Move to the next one. Move to the next one. Forget about that. You have to become a machine in the terms that my goal is to repeat this as many times as possible, following my rules, not my guts. Because it's better to have 2 or 3 more later on, 2 or 3 good executed trades that this lucky one that I knew it. It's gonna hold my technicals. I just saw that it had red. You're wasting your time. There are other many more opportunities that are out there that are ready to explode that you're not looking at them because you're stick with this one, right? Because you got obsessed with the trade. So that's my answer, but you can do whatever you want. Any question, guys? Found it interesting? And this is the clue, guys. This is the whole clue to be successful. It's said very easy, but believe me, it's very, once you're on a trade, you're right. Once you're already in the day and you want more and you bored, and even worse, if you started doing it and it started working perfectly, you're gonna get undisciplined. Be conscious of that. Have the same emotions if it works and if it doesn't, because it's gonna work in the long run. Okay. You're welcome, Will. So let's give it a try tomorrow. Exactly. Control your ego. Don't listen to me. Sometimes I say things that go against these rules for most of you. But believe me, it's not breaking my rules. My rules are different than yours. So you are the only one accountable for following these rules that have been already explained in a very clear manner. You know them, and you know if you're breaking them or not. And if you're not sure, ask. And that is the reason why it's important to share your trades and everything, not to show off or something. It's because you want to have feedback. You want to be accountable also. And it's good to share your failures and your successes as well. And that's why we have this community here, because it's only on us to keep it in this room and only for us, and we don't have to be bragging. And that is the reason I never, and Angela has asked me, I don't know how many times, why do you don't post your profits, because your profit is not, my profit is not out of your business. What do you care if I can give you a lot of success trades and I'm not even trading them, which is not the case, but what good or bad does to you? At the end of the day, it's there. If you execute it, you're gonna have the results. Yeah. Sometimes I post, but only in the room, some trades and some of my wins, but I'm not gonna show them.
And they get deleted a few seconds later.
Yeah, and I'm not gonna show them. How can I know you're the IRS or a kidnapper or
Mexican cartel.
some Mexican cartel? Of course not. Right? So I don't like to do that. So but we can do it here. I mean, I don't have to prove anybody. If at the end of the day, you're free to go. You don't think that this is real? I mean, it's not my problem. It's yours in the sense that here you don't gonna buy a pound of tomatoes with my P&L picture. It's the only thing that you can see in the supermarket, guys. So what do you need it for?
There's this YouTube channel, SMB Capital, is a proprietary, whatever you call it, it's a trading firm, and they They discourage, they've been in business for like 20 years or so. They discourage people sharing their P&Ls. It's just sometimes that discourages people that are not performing well against the ones that are performing well. And, or you just have, it's just not good mentally wise, you know?
No, and that's what I told you. You cannot buy a pound of tomatoes in the supermarket with my P&L picture. So what do you need it for? It's worthless.
Oh, fake profit gang. That's great.
Yeah, fake profit gang, remember? We have had that once. So hope you like it, guys. But most importantly, hope you follow it. You cannot be able to tell me if it works or not if you don't follow these 28 straight trading days. Don't come to me and say after 2 days, no, it didn't work. Or 28 straight days is nothing. But 20 days, in 20 days, 28 days, you create habits. And that is written in I don't know how many books. It's the only way to build a habit in you. 28 days. Like the first one, the last one. Once you have the 28, the rest days, you're already gonna do it because you already saw the results, and you have to be very dumb not to continue doing it, right? So that's it, folks.
Well, one other thing, because it's already time. We might do a challenge account. We might. We'll start it in a little while, so the new people can get used to this risk management. The challenge account will be a little bit different, just because in terms of it's less money, but it's basically the same thing, right? So we'll do still profit targets on everything.
The only difference with the challenge account is gonna be a riskier challenge in the way that instead of that maximum position size is 15-20% of the board, it's gonna be more. I mean, it's
probably gonna be half.
Yeah, it's gonna be half, but it's gonna be aimed to exponentially grow it. One more thing that I forgot to tell you guys. Of course, when you're gonna scale out your positions, when you start growing your account, right? You have 1,000, you follow this. When you get to 2,000, you follow the next max position. When you go to 10, now you go to, when you got to 50, well, and so on. So wait until the next goal is achieved in terms of your balance. And then when you achieve that goal, you move to the next and you scale your position. Don't do it in each trade. Unless in one trade you got from 1,000 to 2,000. So now you're good to go, right? So yes, this challenge is gonna be interesting. But in order for the challenge to be successful, I need that the ones who are participating have this very clear and are committed to follow this strategy of risk management. Otherwise, it's not gonna work.
That's why we're not starting tomorrow. So you guys, people study up and get whoever wants to follow, right? Get
There are videos also recorded already about what we discussed today, probably with some things new that I have found lately, like some of the tips that I gave you about, or that simply I didn't mention it on the recording, but I think that the most important thing, just to give a summary here, guys, is determine your maximum profit and maximum loss per day and stick to it. And secondly, make sure that you only take trades that can give you the ability to buy up to 8 contracts or more with your maximum position. If you follow those, you're gonna be very successful in earlier than you expect. And I think that's all I have, folks. I don't know if there's anything else you want from me, but I'm thinking that I deserve a rest now.
You can stop the recording stats if you're awake. I don't know. No se quedó.
It was
Oh.
a beautiful chat today, man.